It's noonish here in Ventnor City, New Jersey, and our nation's capital, Washington, D.C. And this is CarEdge Live for Thursday, December 11th, with your host, me, Ray, here in Ventnor, who had camera issues, and that's why we were late. And Zach, there in Washington, D.C. You getting ready for some snow this weekend, handsome?
Not sure. I don't think so. I think everything's going to be okay here in DC. We shall see. Today's show, folks, brought to you by CarEdge.com. We are down to 3 days left, 3 days, 20 hours for our end of year promotion. If you plan on buying a car anytime soon and you want to use our car buying service or CarEdge Pro, please take advantage of the promotion that we are currently running. $150 off our car buying service and 15% off CarEdge Pro. And I encourage you, if you haven't done it before, do it now. Go read some of the reviews about CarEdge and all the incredible things we're able to provide to our community. Hear from Rick, Knowledge is Power. I gathered all the data I needed to purchase my new vehicle. I was able to get additional benefits and pricing based on information I was able to find on CarEdge. Purchase was successful. Love seeing when folks use what we've produced here at CarEdge to their advantage. Now, Dad.
Yeah.
The big story today comes from our friends over at Edmunds. They produced, similar to what we have, a video coming out soon, their 2026 market projections. Three trends that will shape the U.S. auto market in 2026. New vehicle sales are expected to reach 16 million units in 2026, despite persistent affordability pressures. And Dad, we've got some scary new data and some scary thoughts for what the auto industry looks like in 2026 from the folks over at Edmunds. You ready to jump in?
Let's do it.
All right, we'll see if my dad agrees or disagrees. The first point we want to look at, who is this guy? You know what? Pause your video. No, you are not my father. My father is my father. What I want to look at here, Des, the first point they have. A K-shaped divide driven by affordability. That's the first trend that Edmunds thinks is going to happen in 2026. This means, Dad, that they think that high-income buyers will remain the shoppers in market, purchasing high-priced vehicles, and we're going to push even more shoppers out of the market that have access to fewer, more affordable vehicles. What do you think? Do you agree with this take of a K-shaped divide for affordability?
So if you're asking me, do I believe that new car prices and the average new car prices will remain high and realistically only appeal to the top 12 to 15% of the American population? I do.
Yeah.
And that's not in a sense that I'm ready to get married. I'm just saying I do.
And I think a lot of what's informing the thoughts over at Edmund would be some of the data we have coming out right now from Cox Automotive. The share of new vehicles under $30,000 falls to 7.5% of November's sales. So Edmunds is making the big, bold bet here, Dad, that we are going to see more and more well-heeled shoppers supporting the auto industry, and fewer of those people that can afford more affordable vehicles actually being able to purchase. I think this is a big, bold bet, and one that we definitely agree with. There's a divide between the haves and the have-nots, and affordability will be a huge storyline in 2026.
The chasm between the haves and the have-nots has grown wider in the 6 years that we've been doing this. With the dramatic increase in MSRPs that we saw that were driven during COVID times, when dealers were adding huge additional profit markups, the manufacturers looked at that and said, well, if the dealers can get the customers to pay an extra $10,000, $15,000, $20,000, then perhaps rather than letting the dealers make all that money, we should just produce more expensive cars. And so that's what they did. Now, when they did that, they did abandon a larger part of buyers out there and basically said to them, we don't care about you anymore. We like you. We just don't like you enough to produce vehicles that you can actually afford to buy. There's used cars for you. Enjoy them.
And do you think, Dad, that will continue in 2026? Obviously, the data from 2025 shows that. You can see here, Edmunds says clearly the average days to turn vehicles with an average transaction price over $70,000 was 61 days, almost identical to the 60-day pace for vehicles priced below $70,000. So $70,000 plus average transaction price vehicles are turning over as fast as the whole auto market is, which is just crazy.
That's because there's that percentage of the population that can afford it, and they're out there buying. They're out there spending their money on those cars. So I don't see anything dramatically changing where it's going to become more affordable for more people to be able to participate in the new car market. Hopefully, it becomes more affordable for more people to be able to participate in the used car market. But I don't see any indications at this point that the manufacturers are considering pulling back what it is that they're building so that they could build lower profit margin vehicles for the rest of us. I don't see them making that decision.
Yeah, I agree, Dad. Now, let me continue on here. And the chart below is absolutely, it's just mind boggling when we look at it in just a moment. Luxury shoppers aren't defecting to lower priced brands. Loyalty remains high, with 64.2% of luxury owners trading in for another luxury vehicle compared to 65.9% in 2024. So folks are not choosing cheaper, more economical vehicles when they trade in those luxury vehicles. They're just getting into another luxury car. Cars accounted for just 17% of the market in 2025, underscoring the continued dominance of SUVs and trucks. Again, this chart in a second here is about to show that. It is just mind-boggling. And the once mighty mid-sized sedan segment shrank further to just 4.5% of share in 2025, down from 5.3% in 2024. So some of your more affordable vehicles may be in these segments that are shrinking in terms of popularity in the United States. And Dad, look at this chart from 2005 to 2025. You're looking at the percentage of vehicles that are made up by these different types of segments. You've got cars, are the dark blue, which back in 2005 represented more than 40% of vehicles sold, or cars. Back in 2010, more than 40%. Back in 2015, more than 40%. You can see now we're at that 17% in 2025. I'll get the comments off the screen for a second here. SUVs, that's the teal line, that has gone up and to the right significantly. Trucks, the purple line, has also gone up and to the right, but it's been a little more stagnant. And then obviously vans, relatively small percentage. It's SUVs, man, the proliferation of more expensive SUVs. And we see this across nearly all manufacturers. We'll do a live experiment on the fly, CarEdge.com. Go to the car search. Drum roll, please. Let's type in, we don't even have to type in it. Defaults for me here to Genesis. And we've got $85,000 advertised price and $84,000 MSRP, 58. I mean, these are SUVs that are just freaking expensive, man.
There you have it. It is. I think what that chart really shows is the power of marketing, and what do I mean by that? When you look at that chart and you see the enormous growth in SUVs, that so much of the population has decided they need an SUV. Why have they decided that? Because that's what the manufacturers have been advertising and marketing and pushing on them consistently via digital advertising, television, radio, everywhere you look. Now, why have they decided to push those cars? They're the highest profit margin vehicles that they build. So they believe it is in their stockholders' best interests for returns to just continue to grow that market at the expense of the more affordable sedan market. Why were sedans big at one point in time? Might have been marketing, where they spent the billions of dollars marketing the sedans to the American public. And then they realized they could grow profit margins by growing the size of vehicles again. And that's what I think part of the issue is.
I think, I think there's some efficacy to where they spend their marketing dollars, but I actually agree more, here with Orange Rubber Ducky. I think it's more the comfort. People prefer these bigger vehicles. Dad, how can you give me that face? You're a data point of one. I'm a data point of one. You think it's marketing? I think it's people prefer to be sitting up high. They feel safer in the road, et cetera, et cetera. So
dig deeper into that. Why do they feel more comfortable that way? Because they have been conditioned to believe that through advertising and marketing dollars. It is the wonderful thing about marketing and advertising is designed to impact how you think of things. It's designed to impact how you want things. Okay, so if it is presented to you on a daily basis, if you are bombarded on a daily basis that what you need in your life is a big ass SUV because it's more comfortable and it's safer, at a certain point you believe it, whether it's true or not. And so I think there is great control of what it is that we get to consume media wise as far as marketing dollars for vehicles, and that impacts how we perceive these things. Perception is reality. So right now, the perception is that big ass SUVs are more comfortable and safer. So that's the perception. So that's the reality. Whether it's true or not is unimportant in many people's minds. The vast majority of shoppers out there, that is their reality, that the SUVs, the big ass SUVs, are going to be safer and more comfortable. Whether they are or they aren't is irrelevant.
I disagree with you, but that's totally fine. Let's keep going here with the Edmunds data, Dad. The bright spot, they say, heading into 2026 is the easing of interest rates. So in November, the average APR in a new vehicle loan, Edmunds said, was 6.6%, the lowest point of 2025. There's a lot of expectations, Dad, that interest rates are going to go down next year. That'd be a good thing for the auto industry if they do, but they anticipate and they expect that average transaction prices, they won't change that much. Edmunds' expectation is that average transaction prices, which when you look at this chart, I know I'm covering up, where it starts at 2015, you can see it down there. It's kind of crazy how the slope of this line, how aggressive it is. That being said, Dad, interest rates are another storyline for next year, and the expectation that interest rates will increase automotive sales because they'll make things more affordable. You and I both are fairly opinionated about this. We don't see that having as big of an impact as many people think.
No, I totally disagree with that. We just saw the Fed lower the Fed rate yesterday by 25 basis points. We know that if there's a 25 basis point drop in the average APR, that's going to have maybe a $3 or $4 a month difference in your monthly payment. So if the average car payment today is $750,
which it is,
tell me that if a person can't afford $750, they'll suddenly be able to afford $746 or $747 because of that 25 basis point drop? I don't think so. So I believe that the industry waiting on interest rates to drop so that it can significantly impact the affordability of these overpriced cars is just a folly on their part. You notice that the price of the vehicles keeps going up. So there isn't a big enough drop in what the Fed rate would be to compensate for the increase in the price to adequately address affordability.
Yeah.
So unless they're going to change the dynamics of what it is that they build and how it is that they push what it is that they build, and unless they want to bring those prices back down into the $30,000 to $35,000 price range where it had been prior to COVID, then the affordability issue is not going to be addressed at all.
Yeah, completely agree, Dad. Now, one other dynamic in this, we're going to talk more about the Edmunds data in a second, but one dynamic tied to this is access to credit. Because if you can just make it more accessible to approve people for auto loans, then it doesn't really matter how affordable it is on a monthly basis. You just widen the pool of potential, people who can make the decision, whether it be a savvy or unsavvy decision to take on that debt. You just increase the number of people in market. And so, Dad, we have the latest data from Cox Automotive. It came out just yesterday. Auto credit access reaches 2025 high in November. We'll look at some of the data points here and talk about what impact this has on the industry. Approval rates. The approval rate for auto loans rose to 73.6% in November, up 1.6 percentage points from October, and up 100 basis points from November last year. Approval rates increased in November after 2 consecutive months of decline. So we saw 2 months of tightening. And what impact does that have on the auto industry? Takes people out of the market because most people are not cash buyers. They finance the purchase of this vehicle. So then what do we see in November? We see a loosening, an opening up of the market. We're going to talk about subprime here in a second because there actually was a tightening in subprime. But overall, we just get more people back in the market because we approve more auto loans. You've always said it. Just because the bank approves you doesn't mean you should do it.
No, and trust me, one of the lines that an F&I manager is going to share with you when they're trying to close you on buying the extra product and having your payment go up is, well, you don't think the bank would have agreed to do this if they didn't think you could make the payments. Well, that's your, whether or not you can afford to make the payments. The bank doesn't. But what it shows is that as approvals declined in September and October, and banks were lending less money, they suddenly said to themselves, well, we need to lend more money because it's in our best interest to have more money floating out there on loans. So what do you do when that happens? You ease your lending requirements to a degree. You approve more people for loans and for larger loans than perhaps they really can afford, because you need to have more loans out there so that it can positively impact your profit structure. It is. And then the other thing we see is keep extending loan terms in order to make it appear as if the monthly payment is affordable when you are paying back significantly more interest to have what appears to be a more affordable monthly payment. It is such a vicious circle. And it would be nice if people would realize what it is they're signing up for and maybe perhaps stop signing.
Yeah, completely agree. It's worth noting the other data point from that Cox Automotive information. If you've got a 330% basis point increase year over year in 72-month or longer loans. So, you've just got more and more people taking on longer and longer loan terms. We're going to come to the chat here in just a second. Before we do, a friendly reminder, today's show is brought to you by CarEdge.com. For 6 years now, folks, we've been building CarEdge.com to be the one-stop shop. If you're going to buy a car, sell a car, protect a vehicle, we didn't even talk about it. Shame on me. Go to CarEdge.com, click on insurance. Every single day, we've been hearing success stories of community members saving money by shopping their auto insurance. Now is the time of year to be doing that. We've got all sorts of resources back on CarEdge.com. And I noticed we had a new release today, Dad. Looks like the car search results are looking a little bit different. We've got the manufacturer's suggested retail price and now the seller price listed right next to it, which is really cool. Love seeing the things that the team are doing. Also, I want to click into one of these. Did we release the other thing that I'm thinking we released? We did. Oh, yay. We've got a new update on our vehicle detail pages, giving you a very clear indication of how much leverage you have when purchasing a particular vehicle. It gives you all the information you need and a breakdown of how the market day supply is impacting things, days on lot. This is so cool. Gives you the negotiation strategy. And if you have CarEdge Pro, you can initiate the AI agent to reach out to that dealership on your behalf. Nice. Love this when we hop on the show and there's all sorts of new stuff. Anyway, folks, check it out, CarEdge.com. The other trends that Edmunds had, Dad, EV share will slip in 2026 as incentive-driven shoppers pull back. The expectation is that the EV market will continue to contract. Will still exist, obviously, but this one I think we completely agree with, right? This actually isn't that much of a hot take.
This would be an absolute cold take. I mean, you didn't need any more proof of that than I don't know, EV sales in October and November declining dramatically from EV sales through the first 9 months of the year. Why? What happened at the end of September? The federal tax credits went away for EV purchases. And so naturally, you're going to see a slowdown in EV sales. Doesn't mean that they're going away, okay? Doesn't mean that there isn't a certain subset of customers out there that want and will continue to want battery electric vehicles.
Yep.
Those customers will exist. That number might eventually grow, but for the short term, that number is going to contract to some degree, as ICE vehicles will remain a tad bit more affordable for most folks.
Let's look at their third take, Dad, which is off-lease inventory will rebound in 2026, offering shoppers affordable used alternatives the 2025 market lacks. So this is an interesting take because we've been saying out loud for a long time, a pretty doggone hot take, which is if you are thinking about buying a 1 or 2-year-old used car and you want to be a value shopper, actually get the new car, which is crazy because pre-pandemic, that was not a sentiment that existed. You always buy the used car because it's depreciated relative to the new car. Edmunds is saying here, Dad, that in the market next year, used car shoppers will have more affordable options because off-lease vehicles will be finally hitting the market. What's your take on this? And also, feel free to explain this as well. Maybe I haven't done a good job making it clear why they think this is going to happen.
Well, I would tend to disagree with them. And the reason I would tend to disagree with them is because we know lease penetration as a percentage of sales for the last several years has been much lower than what it historically had been in the previous 5 or 6 years before COVID. So you have less lease vehicles happening, which means you have less leases coming due. The number of leases that'll be coming due will still be significantly lower than what it had been prior to COVID times. So if there is a slight increase in lease returns, what that means is that we will have a slightly greater availability of 2 and 3-year-old lower mileage, younger used cars available. Do I suspect that with that slight increase that we're going to see a significant decline in the pricing for those vehicles? I do not. And the reason I do not is we know that the new car prices continue to creep up. So if new car prices continue to creep up, the relative asking prices of those 2 and 3-year-old used cars will continue to creep up with them. So I don't think there's going to be a significant increase in lease returns making it to the used car marketplace, but whatever increase there is will be a good thing for people who are looking for a 2 or 3-year-old younger used car.
It is worth mentioning that used car average transaction prices have been kind of sort of flat over the past year. We can come here. Edmunds puts out great data on this. Year over year, the average transaction price for a used car is down 5.8%. So, it's actually gone in the right direction. We're at an average transaction price of $25,814, whereas the average new car transaction price, as we know, is creeping its way on up to $50,000. So maybe, just maybe, that trend can continue a little bit. But I generally agree with my dad here. I don't anticipate.
I believe, statistically speaking, that those 2 and 3-year-old cars are much closer in price point to the brand new cars. That the spread is in many cases not significant enough, which is why many customers will buy the new car with the full warranty, by paying a few $1,000s more than trying to save a few $1,000s on that pre-owned car that's running out of warranty.
Yeah.
The spread needs to be wider than it is and wider than it has been. Perhaps this will impact it slightly, but I just believe that the used car shortage as we know it will continue through the end of the decade till things really stabilize back in the used car side of things. There were 10 to 15 million new cars that were scheduled to be built during the COVID times that weren't built. So there were cars that never got built, so they couldn't get sold, so there weren't any trade-ins. So that impact will last longer than people would like to admit.
Dad, let's come here to the chat. We've got from Jenny. Thank you, Jenny, for the kind contribution. The same Hyundai Palisade that I wanted went from $40,000 to $50,000 from last year. Hyundai, what the heck? We've seen, Dad, these manufacturers increase their MSRPs significantly and increase the proportion of vehicles that they want to produce to be the higher content vehicles. Let's do another little live experiment. We were on, obviously, before Genesis vehicles over on the CarEdge Car Search, but let's come over here for a second. And let's actually look at this, Dad, for Hyundai.
Yeah.
And this was a Telluride, correct? Palisade.
It was a Palisade.
Palisade. So now let's just look nationwide. Hyundai Palisade. Let me remove this comment from the screen so we got a little more space here. MSRP $47,620. Dealers advertising it for $45,496. $48,000. I mean, we're just the first row of results here, and Jenny's spot on. It's now a $50,000 vehicle. Oh my gosh, look at some of these. $61,000. $61,000. This is for a Hyundai, man. 61, 60. I mean, this is we do this stuff live, y'all. This is crazy.
I think the word you're looking for is some of those prices are absurd for a
But
Hyundai.
look at this, Dad. This is why you have strong leverage, right? I clicked on one of them that's $58,000, and we can see 501 days supply of inventory because there's 89 of these for sale, but only 8 have sold in the last 45 days. So these new 26s that these dealers are trying to sell that have gone up in price significantly year over year, this one's already been sitting for 92 days. This is a great candidate to be, this is a great vehicle to reach out to the dealership and secure that discount.
It just seems like almost $60,000 for a Hyundai is ridiculous. There's so many other vehicles with better reputations and better quality that fall into that same price category. That the South Korean brands were supposed to be an inexpensive vehicle offerings and they were supposed to be less expensive than their Asian counterparts or the domestic vehicles. And suddenly they've decided, and Hyundai seems to be getting away with it, and so does Kia, that they've decided they're on par with the top end Asian brands, and so they should charge the same type of pricing as Toyota and Honda, and apparently they can get away with it.
Let's check that because I'm curious. We haven't looked at incentives. Let's see, what are the incentives right now? Yeah, they're getting away with it. There's not a big cash incentive. 3.99% for 36 months is not that aggressive. A lease rate of 5.4%, so a money factor of 0.00225. That's not that aggressive. It's when we look at the market insights, Dad, that we can really see that maybe they're getting away with it right now, but this dealer who's had this vehicle for 92 days and in their market area, we can see here, what is this? This is within 100 miles of this one, only 89 of the same year, make, model, trim, 89 are for sale. Yet in that same area in the last 45 days, only 8 have sold. So yeah, Hyundai's getting away with it. But this dealer, Dad, if you're a dealership, if you're a sales manager and you see this as your market insights, like you're not getting excited about this.
I'm questioning when I'm going to see better incentives from Hyundai, and I'm questioning what my profit structure might look like on any deal that I make in order to get rid of a vehicle like that. That's what I'm questioning. But this is just a prime example of how ridiculously priced these vehicles have become. And why? Because these are their high profit margin vehicles.
And Dad, to that point,
they push them.
To that point, though, we've got here from Daniel earlier in the show. Thank you for the kind contribution. Great job, guys. But it's not just marketing. I'm older with bad knees and a bad back, and it's hard getting in and out of low sedans. A little higher is much easier for me. So this is a counter argument to your comments earlier, Dad, where you were very explicit that you think that marketing is the thing that these manufacturers do to influence our thinking. We've got a counter argument here from Daniel. It's actually comfort.
Well, I get that. I mean, why do I drive what I drive? Because the Mazda CX-30, it sits up higher and was easier for me to get into and out of than my old Mini Clubman. Okay, yeah. But us older folks represent a smaller percentage of the overall market, and you look around, and it's not just us old folks that are driving these vehicles that sit up higher. It's young families.
Dad, I think it's such an incongruent argument to say that young people also don't want to be more comfortable. I have a bad back. I've slipped a disc in my back, and I'm 19. I'm 30. I've slipped a disc when I was 19. Like, I hear you. Let's not debate it too much. Young people and old people can want to be comfortable, Pops. I think that's worth resonating.
Yes, I agree. Everybody wants to be comfortable.
From Rich Diana here. Everyone also wants that Lincoln because of who's the guy who did those commercials? Clint Eastwood?
Matthew McConaughey.
Matthew McConaughey, yeah. All right.
Yeah.
You know, everyone also wants the Lincoln because of him. We've got from Rich Diana here. Thank you, Rich. We appreciate it. Imagine how successful you guys will be when the economy recovers. Keep it going.
Yeah.
Fingers crossed.
What will happen to our business when more than 15% of the population
can afford cars
to buy a damn car? Yeah, what happens then? What do we do then? How do we celebrate? How many bottles of champagne are we going to have to crack open? The unfortunate reality is I don't see that happening anytime soon.
Yeah, maybe next decade, maybe in the 2030s.
Well, I mean, if you read through that Edmunds data, you know, they're predicting 16 million new car sales for next year, which is below the number that this year is going to end at. So what they're predicting, when you hear the 16 million, sounds like a lot until you realize, well, the total sales for this year are expected to come in around 16.3 million. So that's 300,000 less vehicles, new vehicles, that Edmunds is expecting to be sold next year. That's not moving the needle in the right direction. And from the most recent data we looked at the other day, we know that fleet sales are up. So it's not even retail customers that are buying the damn cars. So that means even fewer people are going to be in the market. So you can paint as rosy a picture as you want, but the reality is that this stuff's moving backwards, not forwards.
And it's been like this for decades. The retail auto industry has been in a plateau for a long time. We've got here from Jenny again. Thank you, Jenny. Ray, yep. And Honda wants nearly $60,000 for their Passport in Kansas City, Missouri. Holy cow. Honda getting expensive. Hyundai getting expensive. It's nuts, man. It's absolutely nuts. Toyota, we were talking about fastest selling cars recently. The Sequoia's up there. It's an $83,000 Toyota. And it's one of the fastest sellers in the country.
Yes. No,
crazy. That's that K-shaped car market.
Yes, absolutely. I mean, you know, I keep referring to it as the rest of us, because I don't feel like I'm part of that 13 to 15% of the people that can actually go out and buy a vehicle that approaches $50,000. I mean, the vehicle I bought, gee whiz, that approached the whole $34,000. I mean, so I am a single person, and I make a decent living, and I don't understand how married people with kids can afford to buy those $70,000, $80,000, $90,000 SUVs, whether it be a Honda Passport at $60,000 or a Palisade at $50,000 or a Toyota Grand Highlander at $65,000. How do people do it? Where does it come from? How do you budget $750 a month for your car payment? $150 to $200 a month for your insurance payment, $150 a month for fuel, $100 a month for maintenance. When you add it all up, how do people do that? Oh, and then you have either rent or a mortgage, and you have kids, and so there's all kinds of crap that you have to buy for your kid. How do you do it? And we haven't even talked about groceries. How do you feed a family of four and do all that? How much money do you have to make in order to be able to do that?
Cars obviously have gotten expensive, folks. That being said, we know you tune in, a lot of you, because you're in the market. So again, a friendly reminder that we provide services and products to help you save money during that car shopping process. And again, when you own your vehicle as well, whether it be the extended warranty or insurance, and really want to just make it clear, we're on your side here. Our car buying service is $150 off right now, and CarEdge Pro is 15% off. And I want to, again, demonstrate some new things that you get with CarEdge Pro. You're on the CarEdge car search. Let's say you're in the market for that Honda. You're using the car search. You find a vehicle you're interested in. Sure, this new Honda Civic hatchback. The way CarEdge Pro works is it's going to give you this overview of what your leverage is in negotiation on that particular vehicle. So you can see here market day supply, dates on lot, total for sale, et cetera, et cetera. And then on any vehicle with CarEdge Pro, you can actually initiate your AI agent to reach out to that dealership on your behalf. What does that ultimately look like? You have a dashboard where you can then keep tabs of all of your communications, your agent's communications, which you can toggle between review and edit mode or autopilot mode. And you can actually come in here and see all of the communications between your agent and the dealership. Ultimately, what this is going to yield for you are the out the door prices. So all of your attachments come into one place, and you will actually get your OTD quotes from these dealerships. And the agent will negotiate down the price based on what you told it to do back when you set up when you initiated it. Here, your target price, whether it be a one-time payment, or we know many of you think about monthly payment. Your agent obviously will negotiate an out the door price, but you can still put in a monthly payment goal. So please, folks, take advantage of CarEdge Pro. It's been incredible to see the results that our community is getting. Here's from Neil. CarEdge Pro is an excellent value. I subscribe to CarEdge Pro, applying the information gained through the subscription plus the pro tips I learned from Ray and Zach, resulting in a streamlined process and an OTD $500 less than my walkaway price, which is awesome. And then if everything I just shared with you does not sound like fun, use the car buying service, $150 off right now. And I want to be clear here, folks. We do not get paid by car dealerships or automakers. This is a car buying service where you pay us, you are our customer. There are a lot of programs out there that are just referrals to dealerships, so you then have to negotiate your own out the door price, or they're double dipping. They're charging you and they're charging the dealership. We do not do that. We work only for you. And again, I'll jump back over here. Let's scroll down from Rick here. Joe was professional and quick to make things happen. Started on Tuesday, owned my 2025 Mazda CX-5 Turbo on Friday, learned the buying process, great experience. We do this day in and day out. This month, that will probably be 500 car deals that CarEdge Concierge does, which is incredible. And get a free consultation call. Talk to our team and see if this is a good fit for you, and meet the team that are doing all these deals back at CarEdge.com. Okay, that was my big promo. Thank you, everyone, for letting me get through that. Yeah, but the stuff's good, man. The stuff's really good. 6 years in, we've started to really hone in how we can help people navigate this.
Absolutely. I couldn't agree more.
Oh, yeah, and Igor's spot on. And we also have a totally free forum, caredge.com/community, where you can get help in real time. Incredible group of people over there. Igor himself, Space, so many others. So please use the community forum as well.
It is the amount of free stuff that is available is staggering. Some of the stuff that you have to pay for, I'm sorry, there's costs associated with building all this stuff out. It ain't free for us to build all this stuff out. So yeah, there's some things you have to pay for. The vast majority of it is absolutely free. The community forum is a forum that everybody should participate in. You get more information from those folks than you'll ever get from Zach and I. I hate to break it to us.
We've got incredible. We are so fortunate to be the figureheads of an incredible movement here to make the auto industry more transparent, more fair, and more efficient. Folks, thank you so much for tuning in. We're back tomorrow with another episode of CarEdge Live. Dad, enjoy the afternoon. I really hope you have a good one. And guys, this Ford video we've got coming out next week, we met earlier today to game plan for that. Holy cow. Last year we emailed 100 Ford dealers to get pricing, and ultimately Ford called us saying, oh, what the heck happened here? I think some crazy stuff's about to happen before Christmas, man. So can't wait for that to drop. We appreciate everyone. Tune in again tomorrow. Bring a friend. Dad, I love you.
Yep, love you too, handsome. Thank you, everybody, for being here. We'll see you back here tomorrow.